This morning in Successful Living, we are refreshing our knowledge, yeah, I know, on taxes. That's right, in a game of tax trivia with principal at Ortrando, Porcaro and Associates. Greg Porcaro is here. Thanks so much for coming in.
Glad to be here, Will.
All right, so we're going to start off. It is that time. It's the most wonderful time of the year, right?
It's almost.
Almost.
Right.
And you do have some tax myths to go over that we're going to go over. So let's go over one of the first ones. Taking the home office deduction for a self-employed person is a red flag, because there are a lot of people who are working from home now.
This is one of those myths that's like the Loch Ness monster. That just keeps, we can't get rid of it, right? But the fact of the matter is it's not true.
Okay.
If you're eligible for the deduction, which means you work in your home, actually provide services there, or that's where you run your business, you're entitled to the deduction. You have to keep documentation to prove the size of the home and the office square footage and all that, but it's really simple to do, and it's definitely something people should do if they are self-employed and they're running their business from their home. From their home,
and I'm sure you've seen a lot of that in the past couple of years too,
well,
right?
It's definitely expanded, but even before that, there was a transition to people working from home in some capacity, even before COVID, because a lot of people are just tired of being an employee, want to own their own business.
Sure.
And it's a good way to start, right out of the home. You don't have to pay rent.
Right.
And it gets a lot of businesses off the ground.
Okay, next up, students do not have to file a tax return.
Another one of those myths, right? So either the student or the parent can't figure this out. But the fact of the matter is,
I may be one of those parents who cannot figure it out.
This happens so often, right? If a young person makes over roughly $13,000 a year,
right,
they have to file a tax return, and they're subject to income tax. The real problem becomes is the kids are working like in the summer or whatever, and they don't think about it, and they don't prepare their W-4 correctly, so they have taxes withheld, income tax withheld.
Got it.
And now they get a W-2 for $4,000, and there's $300 in withholding. They want their money back, right? So they have to file a tax return to get it, and it's sad to see. So I tell parents, make sure if your kids get a job in the summer and they're going to make less than $13,000, prepare the W-4 to say you're exempt from tax.
Got it.
It's not because you're exempt because you're a student, it's because you don't make enough money.
Okay, all right, good. Okay, now another thing, and if you can explain this to me, this would be fantastic. All I hear is cryptocurrency. I don't know what cryptocurrency is, or do I need cryptocurrency, but it says transactions do not have to be reported on an income tax return.
Yeah, so when cryptocurrency began to become a thing, there wasn't sufficient oversight, so a lot of transactions were happening and nobody knew about it. And that's what it was designed for, right? Let's be realistic.
Right.
IRS didn't like that and gradually provided a system so that the people that are dealing with cryptocurrency are getting reports, 1099s, brokerage statements, say, hey, this is your transaction.
Right.
And then a few years ago, they added a question right on the return that says, are you doing anything with cryptocurrency? You're supposed to answer that truthfully, right? So they're definitely managing the transactions from an oversight perspective now. So we tell clients, if you're doing crypto, you got to report gain or loss in transactions.
Because they're going to find out.
Well, now they are.
Yeah,
in the beginning, they might not know.
Things are a little shaky. All right, now this last one, and I'm not sure if this is the real deal. You can claim your pet as a dependent.
So that's clearly false, right?
Okay, all right. Because I got two, I'm ready to fill it out.
Even though there are plenty of parents that prefer their pets over their kids, and I hear that a lot.
Who are these people?
The fact of the matter is you can't. However, there are also people that rely on their pets for medical reasons, like a CNI dog, for example. And the cost of maintaining, so to speak, that pet to take care of that medical condition could be qualified as a medical expense deduction, which is not easy to get. They have to exceed certain thresholds of your income, but it's possible that the care of the animal, including the purchase, might qualify as a medical expense, which if you otherwise qualify, you might be able to deduct, but not as a dependent.
Okay, but it is completely understandable if someone is dependent on that pet to get them around. It absolutely is.
A fact.
All right, so now there's a little trivia. First, who is paying taxes right here in the U.S.?
So in 2020, the last piece of information I could get, there were 157 million returns filed. And those taxpayers paid $1.7 trillion in tax. So that's what the U.S. government got from us in 2020. Of that amount, the top 1% of earners in the country paid 42% of the taxes. And the top 50% of the earners in the country paid 97% of the taxes. So the reality of it is about half the population is paying the tax in America.
Right.
And the top 1% is covering most of that. And you hear the rhetoric all the time that, no one's paying, the rich aren't paying, all that stuff. I know for a fact that's not true.
Okay.
Maybe they want them to pay more, and perhaps if there's a mechanism to make that happen, that's one thing, but it's not like they're not paying enough already.
Got it. All right, well, tax season is here, so get your paperwork ready. Greg can hook you up. You can learn more about Petrandro, Porcaro & Associates at roadshow.com.